The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Hi, folks. Larry's away. Basil Chapman sitting in. Dow's up 19. S&P's unch. And we've got the comp index up 5 at 49.73. The volatility index is down at 13.22. And a couple of things are going on here. We've got some of the recent very strong stocks kind of fulfilling upside moves in the Chapman wave to what we call leg D, fourth highest peak. Maybe some of them have recycled, we don't know yet, and others are just taking a bit of a breather. And my suspicion was that I said to my subscribers to my opening call, it's my daily newsletter service, that I think we're in for just a little bit of a break, maybe a few days, and that it depends on how it takes place, and it depends on how some of the stocks are able to get in leg C, pull back, and then go to D. But one thing is really important, and we've got the QQQ. This is the NASDAQ Index 100 trading vehicle, the Power Shares Trust, in leg B, and made a new recovery high today, which means that you couldn't get peak B until tomorrow, leg B until Friday, peak C until Monday, leg D until Tuesday, peak D until Wednesday. It'll take that number of days because you've already used up 3 out of the 7 sessions to go to this, and this is continuing. You haven't got your 4th session down in the waveform. So looking at this, all I can say is that there's a sideways move in the 120-minute chart of the QQQ series. That's really interesting because if you look at the IWM has made a peak so far today because it hasn't, well, the day's young, it hasn't gone above 123.05. And if that becomes a peak, the MACD and stochastic, the technical tools I use, are still very strong, and it suggests there could be nominal new highs, recovery highs, that is, and to push it maybe to a C and then maybe a D. So maybe the actual top for this particular peak in the weekly chart of the S&P, leg C, will only make a peak C. Not next week, it'll still be leg C, maybe. And then the following week, you'll get your peak C because there's a pullback all week. And that takes you into the next week. So let me just look at dates, and I'll tell you right now. So that takes us to the week of the 9th as a potential peak in the S&P, and then the following week might see another leg up to all-time highs, and that's where you got to start being rather careful for March. That's kind of the way I'm looking at it, so that we're getting closer and closer to some kind of a digestive phase. And that could be fairly serious, that the pullback, and then we get ready for another big move to the upside in 2015. Interesting, huh? So, question to Den: what is the count in the NDX 100? And the answer is something that let me just double check here. A, B, C, D, so it's E/B. E/B. I wish it was more definitive, but there's nothing really to do right now because the monthly just broke out into a recycle right there. Look, right there. Chapman wave instant restart. So this is going to be G/C in the monthly. I'm pretty sure it's C rather than a G, but we'll see. And the answer to the question is that the let me just see something here. Should actually, yeah, it's exactly the same as the QQQ series. It should be E/B, and the technicals are quite good. It says that there could be a pullback from 108.66 to the 104 to test the 105s. And if 105s breaks, then you've got to be looking at 103 to 102. But in the meantime, we haven't got a reversal signal yet. So this is just presupposing that certain things happen, and we shouldn't really do that. Looking at it right now, trade what you see, it's still looking good. Okay. Now, there are a couple of things that I want to look at during Larry's show. I want to look at corn. So corn had this move to an A and then a B in the Chapman wave. Let me just quickly do this because some of you might be the first time that you're hearing me and you don't know what I'm talking about in the waveform. Let me get this particular chart because it explains it so easily. I'll just go right there. Nope, not there. I'll go right here. Okay. I'm going to go to this chart here. This is not a live chart. This is a chart that was made the other day. In the Chapman wave methodology, we look for the lowest, most identifiable low bar. This is the schematic. Right there is the actual lowest low bar. And then we merely count each successively higher peak until we get to D. D is where you expect that other things can happen. In this case, it was a very sharp move. That's why a moment ago I said there was an instant restart. That's a recycle. It's a very powerful move to the upside unfolding. And in this particular instance here, you can see the pattern, the schematic goes peak A. The moment you take A out by 1 penny, you start leg B. Leg B holds all the way through until it makes a peak. And then the moment it's finished going down and reverses back up. If it takes out B by 1 penny, it starts leg C, it stays leg C until such time as it makes a peak, and then it's called peak C. And then leg D starts the moment it goes 1 penny above C. That's exactly what you got. You just the difference is this is the futures, so it was 25-cent increments that we were talking about. All right, let's get rid of that. Boom, out the way. All right. So cotton, and this is fascinating. Look, cotton has gone from a peak C minus, actually it's more like a C1, C2 failure, there it is, C1, C2 failure right there, in the arch formation, right there's an arch formation, took out the left side low bar decisively, and just continued its merry way down. And that's the way this pattern works, lowercase h. And then what happens is it pulls back all the way to the little doji candle. What a beautiful sign that was, right? The little doji candle, tiny little doji candle. After all that work to the downside, it has a reversal and it goes from this little doji in the cotton continuous contract from 339 and a quarter. It rallies all the way to 425, round number high. I look at all those things, round numbers, doji candles, they're all very important. And the black line, you see this beautiful black line, repellent, repellent, propellant, repellent, 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 propellant, repellent. Back to repellent, says that corn is having a tough time. And if corn breaks under 379, closes under 379, it could in fact go all the way down to the 368 level. Got to watch it closely. And soy, this is soybeans. This is a continuous contract. Now it didn't do the reversal in the daily in this recent move. It went peak A, peak B, and it's gone to so far a peak C if today doesn't make a new high above yesterday. And the weekly chart did make that arch formation, but it held very nicely at the 960 area. So soybeans is down one at 10.17 and 3/4. And what's really important about this is that it's attempting. It isn't doing it successfully yet, but it's attempting to break out into the 1050, 1060 area. But instead, what's happened is it just keeps this 9-period moving average right there at 1003 at this point. It's just constantly acting like a magnet. It pulls the price up when it's below, and it pulls the price down when it's above. It hasn't been able to break and turn this into a line to walk the 9 EMA, constantly moving higher every time it hits it, using that as a propellant. So we're going to watch that one closely. And I did copper before, I'll do it again. High-grade copper, acting not bad right now, but on a monthly basis, this is just the start of an attempt to make the H pattern that could go to the lowercase h to a lowercase m, and unless it's able to make a V-shaped recovery by taking out the high bar of that ugly candle of this is the Roman candle. Oh, let me show you something. I typed it in right there, and I forgot to talk about it. that Roman candle, there's a technique that I use that I developed on this, is called Chapman Wave Roman candle, that if the price goes into the wick and then starts to trade intra bar, that is, if it's a weekly in the daily chart, if 2 out of 3 days consistently closes below halfway into that wick, that's just the wick at the bottom there. And what does a Roman candle do? Whoosh, it just blows up, right? So that's what you would do, is that you'd expect that if it does close a couple of times below the halfway point of the actual wick, not the candle itself, just the wick, it's going to retest and even maybe break the low. Well, that's exactly what it did, because the low on the week of the 16th of January was 2.4235. And lo and behold, it goes to 2.4190, and now it's starting a rally. And that's very important to start this rally. And then it'll be very important to close 2 out of 3 weeks above the 9-period moving average to show that it has the temerity to continue higher. There's a question. Basil, using S&P, how are you gauging the percentage of the pullback? For example, SPX trades to peak D weekly 2150. A 10% pullback would mean SPX would trade below the 9 EMA. Any more than that, doesn't the leg B on the monthly get called into question? Rephrasing, what percentage loss in the S&P before you rethink that leg B is a B minus and not an F, or a B and not an F? Couple of things. One is, so let's go to the S&P. It's a good question, and let me show you what I'm looking at. If, in fact, we start to trade below the low of January 1988, and I would say, I've been talking about 1982. If we start trading in the 1982 level, that's 30 points, 3,000 points lower in the Dow, 300 points lower in the Dow, then I'd have to say that's the first time that you're seeing the 9-period moving average have the potential to become a resistance level. And if that's the case, then we would see that the technicals would start to weaken. If they start to weaken quite a lot, well, first of all, if it goes to 1982, I'm going to have to say that's almost certainly going to eliminate the B. Not definitely, but just already an 80% chance that I'm going to eliminate the B. Then I'm going to call it a peak F top, and that we're in for time and price to the downside. But as it happens, we will know a lot more, because we're waiting for the weekly chart still to get to D. That'll make a higher high. So a lot of things are in force. They'll be very unlikely for March to, it's not unlikely that it closes underneath the low of 1988 that was made in January. But to start closing under 1982, I have to look at it and say, oh, this is different. Something's happening here that's not very good. We've got a break coming up. All right, Basil Chapman sitting in for Larry Pesavento. Dow's up 13, S&P's unch. And I'll be right back after these messages. Hey, give me a call. I'd like to hear from you. Oh, we got a question. I'll do the question as soon as we get back. Fire Eye. Good one to look at.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartlys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back, and what we're looking at here is the Dow is up 13, but the S&P is unch. Very interesting. And the composite index is up a little bit. It's giving some of it back. And I had a question about FireEye. I'll look at it in a little bit more detail in a moment. Let me just go to our first caller. We've got Mark in Fort Collins. Hi, Mark. How are you?
Hey, Basil. How are you?
Well, thank you.
Thanks for taking my call.
My pleasure.
So I was just kind of curious. I'm kind of trying to fine-tune a few trades I've got going on, and I'm trying to kind of get a feel for where we're at in the 120-minute charts to kind of see maybe when we're maybe done with this current move. And I know we're kind of looking at it being done rather soon here, but I just wanted to see if you could maybe look at some of the major indices, 120-minute charts for us. If I missed your last hour, already done
Okay,
that.
so let's do this. Let me see, PD. I'll do this real quickly. A, B, C, D, E, possible F, no E, and then A, B, C. So S&P is at peak C, I believe, in the 120-minute chart. The Dow is, I've got a count that I had said, I believe it's a B, but I'm thinking that it could be E/B, because if it starts to slide, the Dow slides later in the day. It might not, but if it does slide underneath 18, it's at 18,225. If it goes under the 9-period moving average and gets to the 18,177 level, in other words, if it drops about 30 points from here, then I think the MACD and stochastic will turn down. But in the meantime, they're both holding very well. Stochastic's at 95%. The QQQ series is in possible peak E. That's what I've got there. And so when I'm looking at these, if I don't take in the alternate count, it's suggesting that there could be a sudden pullback. And that pullback doesn't have to be very deep, but it could. I personally would like to see it last just a couple of days, 2 days, 3 days or something, and then maybe go into next week where we can start a new leg up, and that'll be a new leg up for the Qs. But if we get it in the next 2 days, some kind of a reversal that says that the Dow is, based on the 120-minute chart, the Dow would probably have to drop about 40 or 50 points for the S&P in the 120-minute chart to break down. And at this point, let me say it again. For the Dow to break down in the 120-minute chart, the slow stochastic, which is at 95%, would have to break under 80%. And to do that, I suspect that the Dow would have to probably go down probably about 60 points. I don't know what to make it go down 60 points right here. There was a chance this morning that if there was the early morning weakness, if that weakness held and the Dow, instead of being up 13 points, was now down 28 to 32 points, then my bias right now would say, hey, there's a real good chance that we'll close at the low of the day. Now you can see the forces are fighting, as well as the VIX index is pulling back. So there's buying just keeps coming in. So what other 120-minute charts did you want to look at?
Oh, it was mostly, I've got a position in the UDOW that I have down at like 143, and I was pretty close to just taking my profits, thinking we were really top 100. But I was thinking if we have an alternative count, just we're only in leg B in the 120-minute chart, I'd hold out a little longer. So that's
so let me do this. Let me advise you about two things. Number one is the fact that the volatility index is down 43 cents at 13.25 on a day where the markets are actually just kind of neutral is telling me that there's buying. That buying, and that was pretty much the same yesterday and the day before, where the VIX index just kept going down and down and down. But today, it seems to me that, how can I put, I got this image in my head. I'm just trying to explain it now. Let me see if I can get that clear. I know what to say. If in fact the VIX index is going to kick in, it's going to kick in as a surprise. And that'll say that the people that were getting out of the volatility index because it's going down, thinking, oh, what's the use? The market's just never going to go down. You will see the VIX index go from where it is now at 13.26 very quickly above 14.30. If at this point the market suddenly starts to break down. Can you hold on a moment?
Yes.
Okay, sure. So I'll continue with the thinking of what to look for reversal signals. I'll be right back with Mark in Fort Collins, Colorado.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back with Mark in Fort Collins, Colorado. We're looking at the various shorter-term indices, and we're discussing the VIX index. I am discussing the VIX index as it relates to what we could look for if you're looking for signs that the market is ready for at least a brief pullback. I'm thinking the bigger pullback will come later in March, but just a brief pullback. So what we're looking at here is 13.27 is the VIX index. The weekly chart looks very poor, and the 120-minute chart is getting really close to some kind of support. And that support right now says to me that the 13s is very important support in the VIX index, and that 13.50, if it starts to trade a little later today in the 13.50s, then you could see a fairly weak close and a weak opening tomorrow. But there is such determined buying, and I've spoken about stocks like a Triple M, which is only in leg C, the QQQ series, which is in leg B, that it seems to me it would just be an event that suddenly comes about, something sad or whatever it is, and there's just a sudden crude oil dust or whatever it is. There's just something later this afternoon that just triggers some kind of weakness. As it stands right now, this market is acting very well. So we've got to look at these other things. So what I would say to you, if you've got the UDOW, I would just watch it and raise the stop. But the fact that the market is acting well right now, Mark, I would suggest to you that probably being along the Dow is still the way to go, and that you should try to keep that position if you can, because it's going to be tough to get back in if we do not get a pullback in the next day or two, because you might have to wait till next week, and in the meantime, that UDOW will be moving higher. So I hope that helps you.
Yeah, that does. That's kind of what I was thinking. I was either thinking of putting a sell in right above the high of yesterday and just taking that, or putting a stop in just below where we are now.
Well, to put a stop in, just if it takes out yesterday's high, that's really good action. And
Right.
I think you would have room. It would have to be just sudden bad news overnight that really tanks the market. So the market is down. S&P, the futures are down 15 to 18 points tomorrow morning. Dow futures are down 120. And then you'll give back quite a bit of the gain. But under every other circumstance, unless that happens, I would try to hang on as long as possible, or you could do the other thing. You could say, if it breaks to a new high, I'm taking some off because I've guaranteed myself a profit, and then I'll raise the stop on the other. And that could just do it for you and make it a very easy position to have.
Okay, thanks for your advice.
And thank you very much for calling, and congratulations on still holding that. So let's go to FEYE, and let's see, I've got, that's FireEye trading at 44.90, up 94 cents, holding very well. For those, someone's in the den, I think someone in the den was still long. I'm expecting leg D in the weekly. It could be leg C extension if it's this weekend. It goes above 42.30. It's at 44.88 right now, FEYE. I love this action. I've been looking at it, waiting for some kind of a decent pullback, because I thought it would be a great one as a trading vehicle, not giving it a chance at all. Let me just see, FEYE. Yes, okay. So the one thing I would be looking at is 42.93 is a 9-period exponential moving average. If it does close under that, it's making an arch formation and says, oh, I just need a little bit more of a rest. I might even have to test the 41.40s. But so far, the weekly chart is saying, hey, I'm one of the leaders. Don't rule me out. The 120-minute chart has got a U-shaped pattern. It says be a little bit careful if I'm double topping here, because I might want to come back and retest the recent low of 42.70. I like it. I like it very much. And I would try to keep the core position. You could trade around a short-term position, but I think this is one of those you want to just hold on and go for the ride, because so even though it's peak E, the stochastic's good, the MACD is good. I just hold on a little longer. Maybe in 2 days' time, Friday, we'll look at it again. But in the meantime, it's good. So that's that. I wanted to also look at Warren asked about. What did he ask about? Oh, right, DB. DB, while we're getting DB, let me just mention, I meant to mention it before in my show. Have a manicure and a latte with that brake job. Luxury car dealers boost showrooms amenities to keep customer loyalty. Manicures, haircuts, Burlington Mercedes-Benz dealership. I mean, just this is what's happening. This is what happened to the to all the institutions. They were forced to build all these gyms for the kids, and to build to have the food court to look like a regular food court that you go down to downtown Boston. It has to be even better class because of the competition, and the competition is going to force these dealers to spend much more money than they want. But I think they'll get it back, because if people are hanging out, it means that they like very much what they're getting. So Deutsche Bank has made a peak E. And what I said that is, if Deutsche Bank, when I was asked the other day, if we can get into the 3280s, there's a good chance it's going to try to 32. I think 3280 to 3220 area. It would have a chance of testing the 200-period moving average of 34.04. 34.05, which it hadn't seen. It hadn't even come close to for, look at this, since it broke down, a gap down below the 200 period exponential moving average in May of 2014, almost a year ago, at 46.55 with a low of 45.92. It's trading now at 32.81. It actually went all the way down to 27.81. So this is A, B, C, D, E. High-level consolidation looks like FireEye. High-level consolidation at the E. If it starts to pull back between 32 and 31.50, that'll say, hey, I've had a great move. I just need a little time to rest. My weekly chart is improving tremendously technically, and this is one of the better-looking stocks coming off the low in terms of chart patterns, but still, it's what I call the single-leg A-up syndrome. You don't want to see Deutsche Bank, DB, trading at 32.83, down 32 cents. You just don't want to see this give back a chunk of the game by going under 31 in the next 2 weeks. You want to see it hold here, make the 32 some kind of a support level, maybe a quick jab down to 31.5, then right back to 32s, and then go into the 34 area. Once it touches 34, that's the magnet line. It's going to go up and down around that for a little while. So UA was the next question. UA is Under Armour. Now, I know that I've only been to Under Armour a couple of times, and I was going to feature this one as an overlapping wave, but I won't. It's too late now. This is in leg D. It's a 77.02 up 1.47. What I was going to say is that I've been into the stores, at least the ones around in the Boston area. I've been into one, and it was so dark. And yeah, they have really fabulous clothes, but it was so dark. I don't want to go into a restaurant or a cafe with dark lights. This is not Valentine's Day, anything. I want to see the stuff. Old-fashioned. I want to see it. Anyway, so your Under Armour is acting so well. I mean, it's one of the leaders of the pack. The leaders of the pack are showing no let-up in buying. I'm looking at the technicals of the daily, and it says in leg D, as well as the 120-minute chart, A, B, C, D, E, F. No, that's A, B, C, D, E. Yep. As well as the 120-minute chart suggesting that we are getting a little bit closer to the 77.50, 78.20 area, where I think there's going to be a pullback. So we're within about a point-ish of some kind of consolidation, and this cup formation, one of the reasons why I was going to feature it today, and then I completely forgot, was that it's got the cup formation that says is if we break out decisively, expect a leg D, but then you might not get more than maybe an E, and then you got to pull back to test the lip of 76.54, and that's going to be key. So leg D in the weekly, leg D in the daily, and leg D, and this is triple D, and it's looking very good. What I would say is if in the next 2 weeks, I'm saying 2 weeks, I mean next week and the following week, so it's 2.5 weeks. In the next 2.5 weeks, if it closes under 74, so 77.01 right now, if it closes under 74, you're in a digestive phase, and the upside is going to be very limited for a little while. Did you ever go to Abercrombie and Fitch? Yeah, I love that. It's nice and bright. A and F. I haven't done the chart for a little while. It's starting to fail. Yeah, it's very bright, but they're not selling clothes. So brightness doesn't count. Abercrombie and Fitch. It goes peak A, B, C, D, E, F, G. Or is it A? Let me just double check. Yep, A, B, C, D, another one. So it goes to 2 peak Ds in the monthly, and then kaplop. And it makes the H pattern, and it's just broken down. So yeah, there's a big difference. I happen to like light, lots of light, but evidently very light. A very light store doesn't sell clothes. What can I say? Yeah, kids have moved. There's no question about it. The kids are kids are highly vulnerable. They think that they know everything, and probably they do know everything, but not really everything, but almost everything. And they like sheep. They don't know that they're sheep, but they are like sheep. And boy, it must be so hard for these retail stores to deal with young people You don't know. You just don't know when you're going to get out of favor. And if you're out of favor, you are out of favor. I mean, that's the way it is. That's the way it looks like in the charts anyway. So, yes. Now let's get back to our story here. What I wanted to show you is this. Let me just get it over here. In the weekly chart of housing, this week you've made a higher high. That is very important. Now, that's not the all-time high. Let me show you the all-time high monthly chart of the HGX Philadelphia Housing Sector Index. HGX. How do they get housing? What's the GX? I wonder what that stands for. Anyway, leg C, but you know what? Let me show you something. Squeeze. July of 2005 at 293.66 was the all-time high. I remember Tom and I were looking at this. We kept on wanting to short, and it was eventually we got it absolutely right. But boy, it was a little tough going into that all-time high at peak E in the monthly. And then went from 293.66 down to 54.31. 54.31. If ever that is a decline, that is just a huge decline. And now it's come back. It made the arch formation, successful arch formation. Now it's making the cup formation, the bowl formation. It's like a sideways bowl formation. So you take that, and I would have to choose right there. I'm choosing that as my midpoint just for now. That's the candle I'm looking at. And look at this. You go up. Now let's do I do things one step at a time, yes. So I'm going to go to this series of peaks right here. Going to go all the way to the back there. Going to go to that candle. Yeah, it's a tough one. I have to use this. I have no choice. So here we go. So this is the HGX monthly chart. And I'm going to go from there to there. And that's going to say that is my target line. Right there. Make it pink so it stands out. Chapman wave inside wedge target line. Now, and I'm taking it from there. All right? Now, I have no choice but to find the smallest candle. Right there. Okay. And now we're going to go to the right side. Copy window, and I'm going to make it green. What happened? This one, copy window. No, I don't want copy window. I want a new parallel. There you are. And I'm making it green. And that says, now I've got to look at this. There we go, right there. So that says that by June of 2015, the 257.07 level should be tested. It also says that if it breaks that level in the next month or two, there's a chance that we could go, and this is a tough one, to an all-time high in the housing. Wow, this is amazing. In the housing index, I have to use this one. No, that's too short. It's not going to work. I have to go to the same one. I'll go to the same one. It says that using this technique, there you go. No, that's way too long. I wanted to just show where it is. So that would extend us out to there. There it is. Okay, that's the all-time high. If it doesn't do it before then the all-time high by September. There you are. So September of this year, we should see a test of the all-time high of 293.66 if certain conditions are met. Well, I got that done. I'll be right back. Basil Chapman, sitting in for Larry Pesavento.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. We're back. Basil Chapman sitting in for the one and only Larry Pesavento. The Dow so far today has done 18,228 to the upside. That's its high. Yesterday's high was 18,231. If it doesn't take that out or match it, then we've got a peak D. If it's just a tiny little peak D here, we'll get a 2-bar reversal if there's any reason on Thursday to suddenly open sharply down and push down. If we make a new recovery high, that says, oh man, you could even be recycling. Anything can happen here, but that's very positive because the MACD is good and the stochastics at 97%. So I wanted to get that out the way. I want to go back to this chart here of the HGX. So to be more conservative, the first level that we'd be looking for would be 243.01. So far in this leg C, 234.20. That's 7 points away. That's the first step. Then you go to the second step, and that's the one that goes to 257.07. And that's the one that I'm looking at as a potential for a move sometime in before June is completed. Okay, or in June. And the larger one says that later on, maybe September, based on this Chapman inside wedge target line, then we might be looking at 293.66. But that doesn't mean to say that you've got to believe me and say, oh my God, we're going up another 60 points. It's another 30% or something like that. 30%? 360? No, a little less. 25%. And I got to keep buying. The fact is that you got to go one step. This is a monthly chart. The stochastic's at 88%. The MACD is good. It's not great. It's just turned positive again. A lot has to happen, because if at any point it breaks down, and instead of going up the 7 points to get to the 8 points to get to the 240s, it suddenly decides that, hey, I can't handle the 230s anymore. I'm going back to the 225, 227 area. Then we've got to look at that consolidation and say, hey, if that's in a leg D, it could be deeper and longer. So there are a lot of things to look at. I'm saying that if certain points on the upside are broken out, then that's what I'd be looking for. But it's just, I like to just have this in my mind to know exactly what parameters we're looking at. And that's a lot better. Let's see. UT in the den says, I remember I said IBB would be back today, and it is. Yeah, we missed a trade in my opening call. We wanted to buy the 200% long, the IBB. It's not the IBB, but, and we just missed it by a little bit. And look what happened. It went right to the 9-period exponential moving average. I should have used that 9-period moving average. It went, that moving average is at 332.32, and today's low was what? 332.00. And now it looks very much like it wants to make leg C in the daily, which would be above 341.46. Acting beautifully. It had acted weak earlier on back in February, and now it's just the star performer, the leader of the pack. AMGN is acting well. ABC. Did I not do this last night? Why would the letters not stay there? I'm almost sure I did it. Or did I look at it but not actually type the letters? Yep, there it is. Okay, ABC, it should go to D, Amgen, and GILD, Gilead Sciences, is at peak C, and it should too also go above the downtrend line, above 105.42 to start leg D if it does it tomorrow rather than today. Weekly chart is still just okay, but it's really doing well, and the monthly chart is good. So the balance of power goes to the upside, so it's acting very well. Now, just before I'm about to break, my service is the opening call. Check it on the front page of TFNN. You'll also get the webinar I did a week ago on the match between 28 and 29, and where we are, what's missing, what's together, what's working, etc. And it's just something that I think you might find very, very interesting. And you'll get a month free of my service. Check it out. Hey, thanks for being here. I'll be back tomorrow. So.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.